See how this works as far as our discount and premium projection versus what we've got right here. These are the exact same levels. One's got a background, a little different look. Call me creative maybe within the visuals. You want to see projected targets the same, no background, slightly different colors. And when we look at the projected range, so we have the exact same projections on both the X and the Y axis. This got a little background, little lighter kind of color. This is our X axis projection with time. This is our Y axis with price. So exact same projections. Screenshot that. Power 3. Quarterly. Digital root sums of 4 and 3 is 12. Gives me 3. I like the number 3. So we're looking at some form of discount here. Looking at some balance here. So we formulate these if-then statements. See if we go from premium, balanced premium range, the top. These order blocks, it's kind of N. It's giving me the vibes that this is balanced. If it's balanced, it can leave. Is this balanced? It seems pretty close to being balanced. We have this flat bottom here. I call that a repricing candle. You won't learn that other places. It's a concept I utilize. So that flat bottom candle is kind of like an open order. So it works optimally on higher time frames. The lower the time frame, the less of an indication it really is. But 5 minutes is just long enough intraday. So we've gone from premium to balance. Expect some form of consolidation at 50. So we're seeing buy side and sell side delivered more efficiently within this range, which is nothing more than FEG. So we're delivering clearly on the sell side and the buy side of this FEG. Efficiently fill it. Prices retracing into delivering some sell side and some buy side. We anticipate within this projection, we're slapping off of some levels here to a tick. So helps us maintain at least a sense of being on sides. And we do have a very clear discount PD array that we would be interested in seeing filled. And there are models to take trades. Where did that? See, there's really 2 points of interest here. There's this, because there's only some sell side here, right? There's some sell side and there's a little bit of buy side there. So we'll just simply call out where there is an absence. So that volume imbalance is very important here in the DR Academy. It's very algorithmic pattern recognition. So we got a little buy side here, no sell side, so we'd want to see some sell side. And once this range is balanced, it does have clear permission to leave. And we are expecting, due to the data, not just the median retracement or the max median retracement, but also all of the retracement values. So probably going to go until about 7. I don't know if we're going to get this trade to pop off one more time. We'll keep it at a 90-minute cycle. Try and help my folks that are trying to regurgitate and edit and maximize the quality of the content here. It's a new thing for me. I need you guys to be patient. Pretty please. As you grow and continue, I will as well. So we're working on same things but different things. But we're officially in discount. We're in a discount PD array. You look at order block theory, you could call this a breaker, call this a mitigation block. But you're looking at this all as a PD array matrix, and we've highlighted the very specific range that is our point of interest, which is just the high and the low of this fractal. And then we're projecting some price downward, utilizing the exact same values on the X and the Y axis. Slightly different visual, same exact values. Our interest where we take a trade is off of our DR line, and we take the trade as we leave the range. Go another 12 minutes. Got a couple one-on-ones scheduled. Iris, I'll deal with you immediately following the phone call. Well, I say deal with you. That sounds silly. I mean, you know what I mean. I will converse with you and meet you where you're at on your journey real time. I'm liking all of this right now. I think it reflects the data very, very well, and I believe the framework we have in place is accurate, which helps add and build confidence towards a trade plan or a trade idea. Got a lot of relative equals right where those red arrows are. Tag the volume imbalance. Different models would constitute this order block. I'd buy that. Boom. Buy that right there. I would. We hit that projection. Buy this. We're underneath. We're at a discount. I'm not buying it, but I would. I'm not trying to execute on models, but I don't mind visualizing or having you guys visualize where or how I believe that plays out. Our projection hit max extension based off this fractal range that we projected. And if we're off sides, we're off sides, but we can be wrong 10 times and still be profitable. We're not, though. When I look at this, I look at this order block. This volume imbalance has got to hit, so I'd be looking at the mean threshold of this order block, which is right below our projected value. So I would expect that projected value to hold. And again, this model is step 2. Get your reps in, demonstrate that you know how to execute off of this model and that you have faith and trust in when and how it will work. And then we'll get into some deeper retracement values within a model. But I'll mention this call out because it is a pretty decent idea. But you would patiently wait. I feel like I'm on sides, so I would take the take the trade plan to another level. Getting 11R trades with no drawdown and very low stops. How M7's taught me to trade. As has ICT, but I got a lot of love for M7 because he's taken it to a whole other level. And again, we're not trading this because we're kind of in our first semester together. Within our first semester, we got to crawl, walk, run. But if I were utilizing my framework over live price action, I would have enough confluence to make this financial decision. I'm not clicking a button because I don't need to. You need to see where and why and how to apply this for yourself. So, but next projection, since that was on side, and then project this balanced range up. I would say this is my new target. Based off of this order block here. This order block's giving me a balanced vibe, with sell side and buy side being efficiently delivered in this very specific range. Where's this range efficient? Right over here. Right on the y-axis. The y-axis here, we can see very clearly the 4427 down to the 4424. So numerically, this is balanced. I typically would take my directional bias and the largest, or in this case, the most efficient order block within this PD array matrix. And I would project price up and forward. Another way I would visualize this is to anticipate this as the beginning of a new fractal. Could bring it here. This is essentially, again, you'll see the lines are the same. But if we were to try to anticipate the X and the Y axis, maybe we project it to our statistical value here. Into the 830 price. Hope that's not too many lines or too busy. We're looking at this to be our ultimate support. This order block. So again, I am kind of flexing a little bit on what you will learn. And I'm not saying you won't have questions or you don't understand why I've chosen to do what I've done with Fibonacci tools that I have pre-configured to how I see price. We'll bring this back down to reality here. Be a 7R trade from down here. I don't think we would have had much, if any, drawdown. Because we like to buy on down close candles. That helps manage our stop. I think probably would have been a pretty close entry. Yeah, I'm feeling pretty good about this. The model that we're learning, though, is off of here. We got plenty of meat on this bone. So I'm going to leave this here just because we called it out real time. I do anticipate my framework has been on point so far. all of my if-then statements since around 550 to now 650. The last hour have been price has done exactly what and how I've extrapolated the data from Lens, which I erroneously left on, and I'm slightly traumatized about that. I apologize. You missed the real-time execution there, but you can see very clearly where it was, how it was. Wasn't a huge money maker, but we paid for at least the next trade idea. So, my opinion, greens don't lose. Or being green is undefeated is probably a better way of putting it. One mo up, cha. So we're projecting price exactly the same way on the x-axis and the y-axis moving forward here. Got a little seminar trade plan that really feels on side. Want to see where and how price reacts to this open price here. So this is a point of interest. Another point of interest is going to be the mean threshold. Not just that block. I would say this lower quadrant here. So we want to see price hold, expand upwards towards these wicks, which then become kind of liquidity targets within the range. Rectangle. So we'd want to see. Okay, let's make these a slightly different color. Give them a turquoise hue. Control click. I have to change that up. These are all kind of liquidity targets that we believe price are going to hit next. And fill. This will make yellow just cuz. This range, if you recall, we highlighted because of the flat bottom that was here. We highlighted this range with flat bottom. That gave us a lot of hesitance when we didn't deliver below it. So we're managing these different points of interest within these ranges, getting kind of colorful. But the if-then statements, we want to see this support for the bullish idea. We want to see where and how we react, how this candle prints in relationship to the open, or in this case, the close of this price. Wicks do the damage, it's okay. That's why we got our stop where it's at. Oh, look at this other, we've had this here. It's not new. I believe we've mitigated it though, with buy side and sell side. So, wicks can do what wicks do. We don't mind. Wicks, where and how the candles tell the story with their open and their close values. So, those lines that we called out, we're still on sides, guys. We're on sides. And what we're doing is the yellow range that we have highlighted here, just like a stocking. Just like a stocking at Christmas, we're stuffing it. Stuffing it with some sell side in it. A little bit of buy side in it. only went to 50% of the range, so we would expect this candle to come thrust back up into this range and, like a plunger, push price into this flat bottom wick, which we would consider to be like a repricing order block or an open order with more orders to fill within this very specific highlighted range. That's the narrative I provide. It's how I visualize it. Can't say that that's come from any specific mentor outside of my own view. So, I mean, in all honesty, I would, after this candle prints above the open of that order block, I would actually roll my stop up. I would start decreasing my risk, even though there's only 4 ticks of risk on this trade. Man. We're consolidating, getting ready for an expansion. So you need those dojis in a consolidation. Price to kind of recalibrate. Now it's expanding into that yellow box like a plunger with price, pushing it in there like a stocking at Christmas. Got the IDR here, kind of acting as support a little bit. Or resistance, I guess would be the better word. I got so many points of interest here for y'all to see. Hopefully you're able to visualize what I'm seeing and how this expansion is going to go straight to the yellow box. It's taking liquidity. Yellow box will act as support because they're not done pricing that candle. There it is. Stopped right there at my yellow box. Go figure. 6 seconds left. Come back in. Oh, right at the yellow box, not a tick above. Wow, look at that, Kit. So we'll get some sell side to push some sell side back efficiently into the range. Just a little bit. We have a very clear target. We're on side on this trade. We've been on side for the last hour and a half. It's called being in sync with the market. You want to get in sync with the market. If you are in sync, then it's a good day to make money. Might get another little doji here. I wouldn't be that shocked. Kind of seal up this price a little bit. Any comments in the chat? I mean, holler at me in the chat if you're digging this vibe, man, because kind of crushing it. Kind of crushing our sights, our view on price today. Oh, we went above the retracement model. I'm sorry. So you would want to get into if you were trying to follow this model to a T, you'd be looking at some sort of down close candle. We don't have to hit the DR, so I would potentially be getting in on one of these down closes. Slightly smaller R, just below the IDR. Be retracing, I'd be getting in right around chia. Looking at these retrigger, I mean, this candle would, I mean, the stop's low enough. We could take a little bit of heat if you're entering on this a little early. There's the trigger. It's just short of that trigger. Third trade idea, you know, and I would hold this to my projected value. It might be a little beyond that 0.5, but in between our potential. So why did I say we don't have to hit that trigger line? Is because of our mode retracement values are a positive value, not negative. So we're back into that fair value gap, coming back to these relative equals. These purple boxes are liquidity. Highlighted them as liquidity values. Just the tips. We're taking some liquidity from that purple box there. I've had, I think, three trade ideas that pretty much played out. I'm not really stressed about pushing a button, especially since I'm not trading real money. Just giving you guys real ideas. I'm gonna though. You're gonna see it. You'll see it. But this education is meant to be education, not a signal service. So the idea is to help you learn to fish, not feed you fish. Big difference, if you ask me. So feeling good. We did pretty much hit this trigger. I'm not going to touch this. We'll see if this idea would have stopped out or not. Right below, I said I'm not going to touch it. I'm going to be right tick below the IDR. I like that being my wall, my backstop. That's why we do this model. It's to show you guys where and how you can get these low drawdown ideas. Got a very clear defined stop, very clear entry, very clear exit, nothing discretion. The mean threshold held, the open price held, the fair value gap successfully filled, the volume imbalance was successfully filled. We are at equilibrium of our projected range. We like seeing consolidation at equilibrium. Implies balance. And we go from discount to premium back down to discount. We seek the discount PD array within our projected value on the X and the Y axis. And we maintain a on-side approach towards price printing real time. I keep saying we're going to end this thing, and I'm keep playing out this idea. We'll be wrapping it up here shortly. Yesterday's session and today's session were fire. So, second trade idea, half standard deviation. You're seeing some advanced trading techniques from within the range. We need to get good at operating outside of the range. You can see the time matrix is giving us our window, where we're at, where we're going, till here, till 11 o'clock. About at 50%, 7:30 is 50%. Well, it's not really 50%, but 6 hours, 4 o'clock to 11 o'clock, 7 hours, 3.5 hours from 4 gives us to 7:30. Right here puts us at 50% of the window, as well as 50% of our new projection. I like both. I like both. I have a lot of one-on-ones today if I look at my calendar, so we are going to end this here just so I can take a quick break. ES was money today. Hope you felt it. Hope you saw it. Hope you see where it's going, because I do. Wrapping up, just a couple more minutes. Not quite as talkative with the trade playing out as per the plan, with X and Y axis both projected based on data, mechanical entries, zero discretion, 100% analytical, statistics backed. There's a trigger. One more time. Even if this were offsides, which it could be, because we would have taken it, I think, up here, just short of the IDR was the original idea. So stop. You get in up here, you've got very, very clear. Let's zoom in. The idea is you want to see this IDR and the DR hold. And if you got in here and you took 1R loss, I'd take the same trade. Plan would not deviate at all. 1R loss. 1R loss. I would have been in down here. That's not the model we're teaching. We're in this range. We have highlighted here as being point of interest. We had buy side. We haven't really had sell side successfully delivered. So still on sides as far as I'm concerned. We want to see maybe this fair value gap. It's being filled right now. At least it got hit. I'd be looking at, just for shits and giggles, coming off that trigger. Take that. Try it one more time. Now I'd go to the next lowest candle. Right there. That was our low. I would. Well, I say next lowest. That hasn't filled just yet. That's assuming you're trying to get these sniper entries that I'm trying to teach you how to get. 7:35. Already stayed a little longer. Gonna jump into some one-on-ones. Got a bunch of stuff scheduled today. Don't think I won't be here, that we're not actively engaged. Screenshot, be mindful of where and how we are projecting price. There's quite a lot in the way of ideas here. We'll get this live stream uploaded. I'm not sure if we got yesterday's uploaded or not, but we definitely will. And to tell you, there's some crazy alpha happening in this room. Thank you, M7, for bringing me to a completely different level to even be able to explain this stuff to you guys. So ICT has been good to me, and he's got lots of models that I by default utilize, but today the only thing that kept me on side was the data. It was the framework that DR has laid out, and ES was undefeated. So with that said, everybody, much love, much respect.